Boom! Heyo, what's up, everybody? What's up, folks? Welcome to the True Trading Group live stream. My name is Michael Edward. 6 nights a week, Sunday through Friday, we go live right here on this YouTube channel where myself, other THD Pro Trader moderators, and special guests drop golden nuggets and provide you with free lessons, education that can help you become better traders and investors immediately. If you guys are ready to learn, trade, and profit for real, you've come to the place. Take a moment, smash that like button, subscribe to the channel. Make sure you guys share this stream on your own social medias. All right. But why should you listen to anything that we talk about on these live streams? Gang, I began my trading career working for a fund in New York City. My first job out of college, then 2008 happened, and that was the Great Recession and the stock market crash. Also, though, the same year that I received one of the firm's Trader of the Year awards. But first, before they ever let me touch even $1 of their money, I first had to go through an intensive training program. I had access to some of the top trading tools available and was part of a community of like-minded traders that helped ensure my success as a trader. And that's exactly what the THD platform is based on here today. Guys, this live stream tonight is going to go down as follows. We're going to start things off with a 15, 20-minute Q&A. Give some time for people to log on. You guys can ask me some questions that are on your mind. Then we're going to dive into some important lessons and topics that can help you guys become better traders and investors as early as tomorrow. We have a lot to talk about. You've got a continued sell-off in the markets, the crash continuing, the NASDAQ starting to really unravel. Apple breaking below some major support levels. You got the Fed meeting coming up on Wednesday. So we're going to break all that down. A lot of discussion in the media today about the markets. Are the markets bottoming? I'm going to tell you guys exactly what I think and how you can position yourselves to make money over the next couple of days. All right. Then we're going to, for those that are interested, I'll show you later on in the platform. I'll actually show you guys the THD platform, the tools, the resources, everything that's included with your membership. But first, listen up, guys. Listen good. We're going to start that Q&A. Do not be shy. Do not be embarrassed. There's no such thing as a stupid question. So, guys, go ahead right now and start typing your questions in chat, and let's begin that Q&A.
Hey, Michael.
Hey, Adam. How are you?
I look nice today.
Oh yeah, look, you got a little polo on.
Dress up Monday.
Yeah, big day today for you.
Oh, ain't it grand? Mike, tell the people who I am for those that don't know.
For those that do not know who this strapping young fella is, this is Adam, my business partner and co-founder of True Trading Group, the man responsible for getting all of the THD family the amazing tools and resources that are on the THD platform. Like I said, folks, THD is a platform. We're not just courses with trade alerts. You guys can get access to some of the top trading tools that professional traders have access to help them make better informed decisions. This man makes it all work behind the curtain. So everybody say a big what's up to Adam. We call him SUGE.
All right, Mike, first question here. With today making such a move on low volume, do you believe we are still due for a more violent capitulation? Am I pronouncing that word correctly?
No, capitulation.
All right, explain what capitulation is for the dummies like me, and then answer the question.
Capitulation is when you basically get a low is put in because of just a complete, absolute, everyone gives up, everybody sells, there's no buying left, and you get what is called a capitulation low, which is where all the selling pressure capitulates into that one bottom, that one low, and then all the selling pressure is finished, where everybody that wanted to sell, they all sell at the same time. The selling just overwhelms itself, and you get this like cascade effect. Very high volume comes on capitulation. Okay, that's why everybody thought that the low in January, and I'll just show you guys here on the screen, on the charts, so you can see this day with this. I'll make the volume bigger since the thing on the bottom of the screen is blocking it. So you can see the volume on that January low, and then the February low, which was the news of the actual Russia invasion. You can see that volume. So you see, I have really high volume days. That is the type of volume that you would expect to see for a capitulation low. Now, a lot of your market participants have been calling for these two bottoms to be the low. Well, when the first one was put in right here, I told you guys that I do not believe that that is the low. And it turns out it was not the low, as we are now below that. Then you have people believing that the Russia invasion low is the low. I also do not believe that that is the low. So you have two examples of what could potentially be capitulation bottoms, but I do not believe either one of those is. I still do believe that the markets do have another leg to the downside before we do find that capitulation bottom and the bottom and the low is put in. So yeah, today was a lower volume day. I wouldn't call today a low volume day in general. It was lower in comparison to some other volume days that we've experienced earlier in the month, but still 100 million share day on the SPY, which is not a low volume day. I mean, if you go back to, October, November, you can see that there were, 50 million share, 60 million share days back in October and November. 100 million shares it's not high volume, but it's also not low volume either.
What is the significance with a capitulation bottom? Is it something you're waiting for? Why? And before you answer that brings me to my next question, because I assume they're related. You keep making mention, I know you talked about this at the end, that you're waiting to see the markets kind of flush themselves out. Why? What does that all mean? Is that tied to the capitulation? I keep thinking of capuchin, like a monkey when I say it. But is that tied to it? And if so, how? And why do you want them to go lower?
So yes, a flush out is tied to a capitulation because I just think that there's still too many people that are bullish. And I think that, once it's very, very famously that, when everybody's bearish, that's when the markets go higher. Okay. And just like when everybody's bullish, that's when the markets go lower. You still have too many people, in my opinion, based on what is transpiring in front of us that still are bullish. And I think that you need to get those people to say, okay, you know what, maybe the markets do actually go lower. And then you can start to look for a tradable bottom. Listen, I'll tell you guys this. I think that we're close. I think that the majority of the move lower has already happened. I think we are closer to the bottom than we are to the top. Okay. And we've already come down from the top a pretty significant ways. So, when you talk now, I don't believe that we are going to get this much more downside. Okay. I don't believe that's what I'm saying. I think we're closer to the bottom. I think the bottom is going to lie somewhere in here. This is kind of where I think somewhere in this region is where I think the low or where the bottom is going to be. Somewhere down in here is what I'm looking for. So that's what I mean by, I think we're a lot closer to the bottom than we are the top, which means that the majority of the down move, I believe, has already happened.
So real quick, you don't think that the SPY is going to flush down to the 400s?
We're in. What do you mean by that?
We're in the
400s.
400.
Yeah. That's this area right here.
I can't see it. It's blurry on my end.
Oh yeah. Okay. So this, I'll draw a line across 400. So this is 400. This line, that's 400 on the SPY. Okay. So I think that what I think needs to happen is this, and the second line that I just drew, that's the Russia invasion low. Okay. That's the low that was put in when news broke that Russia had invaded Ukraine. That low is where a lot of people are saying, oh, that's the bottom. That's the bottom. A lot of people that are bullish think that's the bottom. So you've had a lot of people that have come in over the last 2 weeks and are getting long in this region. And what I want to see happen is I actually want to see that low get broken. Okay. And then flush it. And then you can then start to find your tradable low. And then the markets, I think, can start to then move higher from there. Okay. So that's kind of, that's the area that I think that the markets can kind of get down to and can kind of settle in. It's going to be somewhere down in this region. Now, guys, listen, picking the bottom of a market pullback is extremely difficult to actually say this price right here, this number, this is the bottom, this is the low. We're not going to go a penny lower. Extremely difficult. It's a fool's game. Don't try to do it. That's why you really have to start thinking about areas of a bottom and not necessarily one specific price, and understand what's going on from a macro scale and what key fundamental components of the storyline can change for the positive that can actually make markets move higher. All right. So, and the Fed has a lot to do with that. And we'll talk about that more later on in this live stream, because you have your Fed meeting and many of you are about to experience your very first rate hike cycle. And we're going to talk about that later on in this live stream.
All right. And for those that are just joining us, welcome. Make sure to smash that like button. Go ahead, subscribe to the channel. Make sure you share it on your own social media. Also, real quick, I posted a poll inside the YouTube live chat. The question is, do you believe the U.S. stock market is going away? All right. Please go ahead and answer that poll, and we'll talk about that in a little bit. So far, 283 people have voted. 13% of you said yes, and 87% of you said no. ... What the F are you talking about? So we'll see how that poll shifts out here soon.
Wait. Is it 13% said they think the U.S. stock market's going away?
Yes. Now 12%. Somebody changed their mind. No, I'm just kidding.
Oh my goodness.
All right. Away where? Like done, like away. Like gone for good. No more stock market. I'm just curious. That's the question. Answer the question. There's 415 people now since we talked about it that voted. 13% of you think yes.
They have to be kidding.
I don't think they are.
I fucking hope so.
All right. Well, moving on here a bit. So walk me through this. What happens when the stock market gets to whatever the low is going to be? What happens at that point?
Enough people are done selling, and prices get to an area where people can't help themselves, but they say, you know what, these stocks have come down enough. It's time for me to start buying them. And that's all this is. It's multiple compression. Earnings are being readjusted, demand is being readjusted, growth is being readjusted, multiples are being readjusted because interest rates are rising. And we were at, all-time historic levels of valuations, not just all-time highs, but like all-time high valuations in relation to GDP in the United States. We were at all-time highs. And those valuations needed to come down, and that's what you're seeing. You're seeing, multiple compression, but you guys have to realize that when you go through a bull market that lasts a decade, right? And you go on a bull market that lasts for years and years and years and years, it doesn't get fixed in 1 month. When people decide, when money managers and hedge fund managers, asset managers, when they decide that's like, okay, I need to start selling out of these positions and move into this position, and prices are too expensive. I'm gonna, take profit and wait for them to come to a better level. You don't unravel a decade-long bull market in 1 month. It takes time. Corrections take time. Sell-offs take time. And that's what you're experiencing. Bear markets, corrections. This takes time to resolve themselves. It doesn't happen in 1 week.
All right, but correct me if I'm wrong, though, but bull markets, bear markets, sell-offs, all of this stuff is all normal parts of the stock market.
Absolutely. A lot of people, the problem is, the reason why so many people are freaking out, and there is absolutely zero reason to be freaking out. The SPY's not even 20% off of its highs. Like, so many people that are in the markets today, from a retail trader perspective, just got involved in the markets over the last 2 years. And over the last 2 years, all they've ever seen is stocks go up. They've never seen the stocks go down before. They're like, oh my goodness, Snowflake is down, Palantir is down. How is this possible? Coinbase and Robinhood, oh my. Like, they've never seen that before. They've never seen stocks go down. It's just, everything just goes to the moon. You just buy, you hold forever, and stocks just only go up. That's not the real world. That's not the real market environment. And it's very normal for the stock market to experience a correction in any given year. Okay. Last year, what people have to understand is last year was not normal. But a lot of people got involved in the markets for the very first time last year. And that's the only thing they have to compare to. It's not normal for markets to go up 28% in 1 year and only experience nothing greater than a 4 or 5% pullback at any point during the year. That's not normal. What is normal is for the markets to go up, from January to December, to from the open of January to the close in December. What's normal is for us to be up 8, 9, 10, 12% on the year. But somewhere in between January and December, the markets went down 10%, 12%, 13%. Then they bounced back. That's normal. Many people have never experienced this before. I'm not I am not nowhere near freaking out at all. This is normal market environments. And it's completely normal. It's completely healthy. What's not healthy is for stocks of companies that don't make money and continue just to lose money, for their valuations to just continue to go up 100%.
Well, let me ask you. I'm sorry to interrupt you, but let me ask you a question. If some people, and I'm not saying they're right. You obviously know I ask you questions that I will somewhat know the answer to already myself, but think that the people on the stream could get benefit from, right? Some people will say, well, how could you say that? The market determines what the price is. So whether they're making money or not making money, why should that matter if the market decides the price? It's supply and demand, right? So a lot of people were saying that around a lot of the meme stocks, right? That, why are you telling me that AMC can't go to $100 or $500,000 even? It's whatever the market decides it is, right? So I guess my question is, why is it important that these companies follow somewhat fundamentals and things of that nature? So I guess, why is that important to have there?
Because fundamentals matter when you're talking about the markets finding price, and you talk about supply and demand. Fundamentals matter with supply and demand. There's not enough people on Reddit that are going to buy, AMC to make it go to $500. It just doesn't exist. There's just not enough money on the planet of people that are going to want to put their money into that investment to make the stock go that high, because fundamentals actually matter. And no one's going to buy. No one's going to look. You have to look at what the market cap of AMC would be if we're just using AMC as an example. Do you guys understand what the market cap of AMC would be if AMC ever went to $500? Do you realize how much more valuable that company would be than all of the other companies that actually generate billions upon billions of dollars in pure profit? It would make zero sense whatsoever. It would be like if I just said to myself one day that this pen that I'm holding, that this pen is just going to be worth $1 million one day. It's not. It's not. It's not going to be worth $1 million because it's not worth more than the watch that's on my wrist. It's just not. Fundamentals actually do matter. So you can't just say that, supply and demand. Yes, supply and demand will move markets, but at some point when valuations and the price of what it is that you're buying and selling, and this goes both ways. This is to the upside. It's also to the downside. Fundamentals matter. And that's why, especially when you're experiencing market declines like you're in right now, it's the companies that generate very strong cash flow and positive earnings that stabilize first, because it's a lot easier to determine a fundamental value of a company that's making money. It's harder to determine a fundamental value of a company that's growing at a very rapid rate, but is still losing money. That's a lot harder to establish. So just like stocks are not going to endlessly go up forever, because at some point valuation matters, stocks will not go down forever because at some point valuations matter. And that's how lows of markets get put in. When the overall stocks, like a stock like Apple is not just going to go down to $10 a share, because somewhere along the way, every single hedge fund manager on the planet Earth is going to say Apple is worth more than the price it's currently trading. Therefore, I'm going to buy. The price then starts dictating supply and demand, because at some point, the demand is going to be so high for Apple at the price that it's being offered at. and the supply will be so low because no one's going to want to sell it at that price. And so many people are going to want to buy it. Then all of a sudden the price actually flips supply and demand on its head. And that's how market bottoms are put in. And that's where that capitulation term comes from. When you get so many people sell that a stock gets to the market as a whole, or a stock gets to a certain price where supply and demand flips, where it's at such an attractive price where they say, wow, we're just worth more than this. I'm going to buy it, regardless of what's going on around the world. That's how bottoms are put in.
So my question to you is, and again, walk me through it like I'm 5 years old. Okay. When a bottom is put in, what typically happens at that point? Things start to consolidate. People that have money on the sidelines can then go shopping.
Mm-hmm.
So I guess what I'm saying is, if right now you expect, so where's the SPY at right now? It's hard to see your screen on my end.
About 417.
Okay, so if we're at 417 and you believe that over the next however much time, we could see the SPY go to 400 or within that range, right? So we're talking $17 from where we are now, which is a lot. What happens at the bottom? Is that, how do people, so my question is twofold. How do people weather where they're at right now between now and then? And then what are some of the ways that people can take advantage of that opportunity, if there is any? Is there an opportunity? And if so, what can people do at the bottom at that point?
There's always, and let me be very, very clear. There is always opportunity. The market is one gigantic arena of opportunity. Okay. Money does not just disappear and vanish into thin air. It just moves. And if the market's going down, some people are losing money and other people are making money. Okay, so someone is selling and someone else is buying. Someone's right and someone's wrong. Someone's short and someone's long. So there's always opportunity in the market. And, to talk specifically to the point that you're asking me, and this was something that I covered in the workshop that I did just a couple of weeks ago. I did a workshop a couple of weeks ago about, like, how do you trade in the stock market crash and how do you build wealth in your long-term portfolio during that time? You have to look at it this way. Regarding the S&P 500, which is the biggest example of what the U.S. stock market is. Okay, the NASDAQ doesn't cut it. The Dow doesn't cut it. The S&P 500 is your stock market. And when you go back in history and you look at the biggest stock market crashes that our generation has ever seen in history, what are they? The 08-09 Great Recession, where you had the greatest financial crisis that this earth has seen since the Great Depression of the 1920s. And you look at that crash, and then you look at the dot-com bubble bursting in the early 2000s. Those two scenarios are the greatest stock market crashes that we have ever seen. Nobody's around today that was trading during the Great Depression. Nobody on this live stream was trading during the Great Depression. So if we focus on those two scenarios, in those two crashes, the S&P 500 went down about 55%. So regardless of what's happening in the world, the U.S. stock market will get to a point where valuation matters. And that's what I have done over at least over the last decade, and I'm going to continue to do for the next decade and for the decade after that. I use 50% on the S&P 500 as my worst case scenario benchmark, because the U.S. stock market is not going to go down at 90%. Yes, areas of the stock market can go down 90%. Certain sectors can go, like Chinese internet stocks. They're down 80%. The Chinese internet stock ETF is down 80% from its high. The NASDAQ during the dot-com bubble bursting was down about 75% from its all-time high. So specific areas of the market, yes, you take a look at a stock like Robinhood. You take a look at a stock like Palantir. Okay, you take a look at a stock like Affirm Roblox. You start looking at some of these companies, yes, certain areas of the stock market can go down 70, 80, 90%. Yes. But the S&P 500 as a whole, no. If the S&P 500 goes down 80 or 90%, we've got a lot bigger problems on our hands. You don't have to worry about money because it'll be the zombie apocalypse. Money will be useless, and we're all going to be living in the woods trying to just fend for our lives and survive. Okay, and at that point, it doesn't matter. That's where that quote from, don't ever bet on the world ending because it only happens once. And when it does, who are you going to collect from? Okay, don't bet on the end of the world. So I use for my benchmark of a worst case scenario, a 50 to 55% drawdown on the S&P 500. So as the S&P goes down from its high, I start looking at buying opportunities once you get to that 20% range, regardless of what's going on and what the news headlines are, because at some point fundamentals and valuation matters. And I'll be a buyer of the S&P 500, and in my long-term portfolio, I'm not going to buy the SPY specifically. I'll buy some individual stocks. But when the S&P goes down about 20%, that's when I start to go shopping. Now, historically, during a bull market, 10 to 15% is when I start to go shopping. But that's when you're in a bull market. This is different this year right now because we're for all intents and purposes, without the technical definition of the S&P, we're experiencing a bear market type of trading activity, what we've seen so far in 2022. The NASDAQ is already in bear market territory, and the S&P is not too far behind it, even though the technical definition is down 20%. We're not there yet on the S&P, but, that's the area that I start to look for where I'm going to start becoming a buyer. And then if we drop down to 25 or 30%, I'm going to buy more. We go down 35 to 40, I'm going to buy more. And that's it. I'm going to sit because in the worst stock market crashes that our generation has seen, we've gone down 50 to 55%. And I look at that as my worst case scenario backstop. Now, all of the things that are happening around the world, let's look at all the bad negative things that are happening that are just soaking up all of the news headlines, the things that has everybody scared, right? Inflation, 40-year high. Guess what? Inflation's not going to go on forever. Inflation will eventually come down. The Fed is going to start raising rates. I don't think the Fed is going to raise rates so aggressively that I don't think you're going to get 7, 8, 9, 10 rate hikes. I think you get 4 or 5 this year, and the Fed sits back and waits and see what happens. But at some point, inflation is also a self-fulfilling prophecy too, because as inflation goes up, demand goes down because prices go higher. So what do you need to help inflation come down? Demand to come down. Now, whether that demand coming down is something that the Federal Reserve does or is something that just happens because prices go so high that people stop wanting to buy stuff, that will bring inflation down also on its own. You also still have supply chain issues that need to be fixed. The Russia situation is not helping. China just went back into another COVID lockdown. That's not going to help supply chains either. So those are things that are not helping inflation. But inflation is not just going to go on forever. Inflation will eventually stop. You look at Russia, Ukraine. Then you look at China and Taiwan. There's a lot of stuff going on right now with China and Taiwan. The U.S. made comments about China. You better not help Russia avoid their sanctions. Otherwise, there's going to be serious consequences. What does that mean? What consequences are the U.S. going to do to China? I have no idea. Okay. I have no clue. Right. But at some point, guys, valuation will matter. And at some point, the markets are going to look forward, no matter how bad things are at that moment in time. The market's going to look forward and say, the world's not ending. And then people will start to buy. And that's what happened in 2009 when the bottom was put in from the Great Recession. And that's what happened in the early 2000s when the dot-com bubble burst and the NASDAQ went down 75%. I think it was like your Dow Jones, your S&P went down about 50, 55% at that time also. At some point, valuations matter. And we're nowhere near that type of environment right now of an 08, 09 Great Recession. We're not there yet. Doesn't say we can't go into a recession, but a deep one, as deep as we saw in 08, 09, I don't think so. But nobody really thought that in 2007 and 2008 either. But guess what? Even though you went into a massively deep recession, life went on. The stock market went on. And you were left with insane opportunities to invest in 08, 09, 2010 for those people that had the wherewithal and the education to put money to work and put money into the markets at that time. And you're going to get that again, over and over again.
Yep. I think one of the things to consider here is that, and correct me if I'm wrong, right? But I think one of the things to consider here is that a lot of those times of market crashes, there was a full. I mean, correct me if I'm wrong. There was full on recession at that time.
Yeah, 0809 was a great recession. It literally
what I'm
is
labeled the right now. A lot of people have jobs. Yeah. A lot of people are employed. A lot of people are are working. I mean, correct me if I'm wrong, right? I mean, it's not that, at least for this moment, it's a little bit different, a little bit, off, because typically you don't have a surge in employment when this type of thing happens. Is that correct?
I mean, yeah, like we just got back to full employment. The COVID lockdowns and everything set unemployment up to like 11%. Now we're back to 3.8, which is widely considered by the Fed, whose mandate is inflation and employment. Those are their two mandates that they control through policy. They consider us right now at max employment, at full employment. So, to sit here and just say, oh, no, this time's different. People said that in 2008 and 2009. And people have said every single time the stock market's crashed, everybody says this time's different. Okay, what's different? What's going to happen? The S&P is going to go to 10. The SPY is going to go to $1. What's going to happen? No, of course not. Of course not. The U.S. economy, we're going to become Somalia. Like, no, of course not. Okay, the world is not ending. Don't ever bet on the world ending. Because if the world does end and you're right, great, good for you. But guess what? Doesn't matter, because money's worthless. The world's not ending, folks. We're not even down 20% on the S&P.
Right. So Doc is a new member that just signed up last night, actually, and he just put a comment in the live chat on YouTube that said, "Jobs are good, economy is strong, so this inflation isn't, quote, horrible. It is somewhat out of control, but it isn't, quote, horrible. If this was a weak economy and we had this inflation and everything going on, I think it would be massively different."
Well, yeah, well, then you have stagflation, where you get slowing growth and rising inflation and everything, and yeah, that would be very bad. Like so yes, like inflation right now, it's really, really, really bad. But the fact that you have a cashed up consumer, don't forget, not too long ago, we were for Americans at the all-time high for savings, because nobody can go anywhere. Nobody could travel. Nobody could go shop. Everything was closed, right? So people were saving, not to mention then stimulus checks and PPP loans and all this free money that was just dumped onto the U.S. economy. So yeah, the U.S. consumer is in a much better position to handle that inflation. But listen, nobody can just sit with $7 gas forever. It's like that stuff does hurt. When you go to the grocery store and you spend $500 to feed a family of four, for a week, it's like, yeah, eventually that doesn't matter how strong the economy is, that's going to affect demand. That will affect demand. Okay. Yes. That will affect demand. And it's like, yes, you're in a better position right now because the economy was coming into this strong, but economies usually do come into these situations strong, and then the economy then recedes, and that's where you get the recession, where the growth that the economy is having, that growth starts to slow down, and the growth will slow. And then if the growth goes negative, that's then when you get a recession. A technical definition of a recession is 2 consecutive quarters of negative growth. That is a recession. So right now we're experiencing a slowdown in growth, but not yet a recession. Not yet a recession. Now, that doesn't mean that we can't go into a recession. I'm saying right now, today, we're not in a recession. The technical definition of a recession.
Mm-hmm. Yeah. It's just, I just remember you saying something the other night on one of the streams that it was just very, just a different situation, that we had never been in this position where the jobs numbers were what they were. Oil was at the price that it was at, and inflation was at the level that it was at. And it was just kind of like, it didn't really add up 100% for you.
Yeah, there's 2 things that the people that are the greatest tell of a recession. 2 things. You've never in history had oil at 120 and an inverted yield curve and not gotten a recession. That's never happened before. Now, we got oil to 120. Today, listen, oil has pulled back significantly. I mean, listen, still high. It's still up at 100, 101, 102. Oil is still high, but oil has pulled back. I do think oil does go back up, though. But you've not had it. You don't have an inverted yield curve yet. You have a flattening yield curve. You have a flattening yield curve. All right. So people are being mindful of that inverted yield curve where, the yield on a 2-year is higher than the yield on a 10-year. That's not good. That's what you don't want to see. You don't want to see the yield curve invert, because then that's just a surefire signal of a recession. Now, a recession does not need to be this elongated thing either. Recessions can last just a couple of quarters, then you can bounce back out of it. Or recessions can be deeper, like you saw after 08 and 09. But even after 08, 09, the markets in a couple of years were back to all-time highs. And you'll get the same thing. You'll get the same thing when the bottom is finally put in. But let me be very clear. I do believe the markets go lower. I'm not telling everybody.
I'm sorry. Go ahead. Go ahead.
I do believe that the markets do go lower from here. I don't believe that the bottom is in.
Right.
I have not added to my long-term portfolio yet, but I will soon. I think we're closer to the bottom than we are to the top.
Got it. So is a slowdown in growth required to offset inflation? Is that the point of raising rates?
Well, listen, the biggest thing about inflation is it's supply and demand. So you need to slow down. And right now, the problem right now, why inflation is so high, is because you don't have an imbalance of just one. You can get inflation from an imbalance of just one side of supply and demand. But right now, you have an imbalance of both. You have demand skyrocketing because we're coming out of the post-COVID era. So demand went from, very, very small demand because everything was shut down and the economy was closed. And now all of a sudden the economy's back open and there's tremendous demand. And you also have supply chain issues that are putting a strain on supply. That's why inflation is at the highest level it's been in 40 years. Then add on top of that, all of the stimulus and the free money that was just dumped on top of everybody for 2 years. Okay. And all the stimulus that the Fed was injecting into different financial markets and the stimulus that the government was putting into the economy. Okay. So you add all those things together and that's where you're getting this inflation from. So we have a demand issue where demand is too strong. You also have a supply issue where supply is too light and too strained because of supply chain issues. So there's a lot of factors that are going into causing this inflation. But a slowdown in demand would help slow down inflation. Also, an increase in supply would help slow down inflation. So you have those two things that you're going to need in order to have inflation kind of cool itself out. And yes, raising interest rates doesn't do anything for the supply side, but it does impact demand.
All right, next question. Why do you think people are still bullish right now?
I think people are still bullish.
Because hang on one second. The market's done nothing but go down in 2022.
Yeah.
Right?
Mm-hmm.
Essentially, if you turn on the news, all you're going to hear about is how we're 5 minutes away from a nuclear holocaust, right, or the next pandemic, or whatever it is, right? None of it's good, and people also need to understand that this is how those news stations get paid. Also, is sensationalizing a tremendous amount of this stuff. God forbid they didn't have this stuff to talk about. Not sure what, Pete Davidson and Kim Kardashian are not interesting enough to ride this out long term, right? So my question is, why do you think people are still so bullish right now? Where does that, why is that? And what ultimately may happen to those people?
Depends on your time horizon when you say what's going to happen to those people.
The people that are 6 to 12 months.
The people that are bullish right now, meaning that they're buying right now, I think they're going to have to endure some downside and they're going to have to endure some pain, but then go out a couple of years from now, and those people I think are going to be just fine. go out 3, 4, 5 years from now, and anybody that buys at any point during this year is going to be absolutely fine. You could have bought the dead high of January. Go out 5 years from now, and I think that those people will also. You could have bought literally right here and go out 3 to 5 years from now, and I think those people are also going to be up.
But traditionally, most people are not going to do that, right? Most people are not going to buy and watch their stuff go straight down and just hold it, believing that it's going to be better in 3. At least most people. A lot of people, and this is one of the things that that you cover a lot in trading in your trader psychology course and True Trading Group, is a lot of people don't know how to sit with their investments. It moves up and down, and they immediately want to sell or buy more. It's very impulsive behavior that usually ends up biting them in the butt.
Yeah, big time. Most investors wait for the stock market to crash, and they say, "Oh, now's a bad time for stocks," and then they go ahead and they sell very close to the bottom. Historically, investors that have panicked out of stock market crashes, they don't panic out of it anywhere near the top. They don't even panic out of it anywhere near the middle. Like when you look at because the panic doesn't set in until you're close to the bottom. That's what creates the bottom. It's the panic. It's the sheer panic and fear of the world is ending that gets you to the capitulation that we talk about, where everybody cascade sells, and it's just like, you kind of get it out of the way. No retail investor, if you look at a 50% decline in between 08 and 09, no retail investor that is uneducated was out at a 10% decline. None of them were. It was like, oh, the stock markets go up, stock markets go down, it'll be fine, buy the dip. Then you're down 20%, and they go, oh, wow, oh, man, this one's tough, but hey, stock markets just go up. And then all of a sudden you're down 30%, and they go, now all the media news is covering blood on Wall Street, stock market crash, financial crisis, subprime mortgages, foreclosures all over, the world is ending. You're down 40%. And they go, oh my God, I'm losing all of my 401k and my retirement money. I better sell it now down 35 or 40% before I lose it all. And they sell. And then it goes down another 5 or 10%. And they go, whew, thank God I sold, man. I'm so lucky that I got out. And then the bottom gets put in, and they think, nope, now's a really bad time to get my money back into the markets, and they don't do anything. And then the markets do find a bottom, they recover, they bounce back, they move higher, and then they wait until the market's back to all-time highs, 2014, 2015, and they go, oh, market's back at all-time highs, I better get back into the market. But you realize the net loss that you just incurred from selling down here and buying back up here? That's what a lot of people don't really necessarily understand about when the emotion kicks in, when the emotion kicks in during a stock market crash. Most retail traders don't even realize that the stock market's crashing. And I'm not talking like all of you that are on this live stream. There's over 1,000 people on this live stream. You all are obviously interested in the markets. You look at the markets, you follow the markets. Otherwise, you wouldn't be on this live stream looking for more information. And I commend every single one of you for getting actual information and understanding what's going on during this time so that you don't make these mistakes that will cost you a tremendous amount of money over your lifetime. Tremendous amount of money. But it's the people that don't follow the markets, by the time they even figure out the stock market's crashing, it's too late. The crash is already 3/4 of the way in. It's like just now, the average person's like this is how I know, because it's like people that never followed, that don't look at the markets ever, and all of a sudden I talk to them in passing, or I'm smoking a cigar at the cigar lounge, and somebody that never follows the markets, they go, oh, Mike, the markets aren't doing too good lately, huh? What's going on? They go, oh, okay, yep. See, now we're down 20%, and now you're finding out that the stock market is down. You don't ask me this when the stock market's down 5%, 7, 8, 9, 10, 12. It's down 20, 25. Now I start to get the questions. The damage has already been done. If the worst case scenario for me, the backstop, is a 50% drawdown on the S&P, if you're down 20 or 25%, worst case scenario, you're halfway there. And that's when the average retail person just starts to know about it. But they don't sell at that moment. They wait for the markets to go down 30, 35. They panic, they dump, then the bottom gets put in. That happened to everybody during COVID. The markets went down 35%. The S&P went down 35% and then exploded to all-time highs. Do you have any idea how many people lost money during March of 2020 because they panicked out down 30% and never?
I'll tell you what, real quick, just to further give validity to what you're saying. Not that I need to, but just in general. For those that are maybe just joining us, I co-own True Trading Group with Mike. I've been involved in capital markets for a really long time, almost 20 years. And in 2020, March of 2020, Mike, I'm a little bit of a hoarder with my cash, right? For me, I like to see the money in the bank, right? I'm like a 90-year-old woman. I like to see the money in the bank. I'm like my grandmother. She always loved to see the money in the bank. And it was really hard for me mentally to go ahead and say, okay, I'm going to invest it, because the world looked like it was absolutely falling apart at that time. And Mike was, telling me, he's like, bro, dude, you need to take whatever it is you can afford to put in, and you need to go buy it. And I didn't listen. And that has been, that's been a little bit, not a regret, because it's a lesson, right? But that's, that's something that I've thought about quite a bit.
Yeah. And this time around, folks, you're going to have plenty of time. Like the sell-off in March was a very unique scenario, where we got government intervention like we've never seen in history. And the markets put in a violent V bottom. A V bottom means this. I'll just draw it on my screen. So a V bottom means the market's crashing. And then when the market finds the bottom and finds a low, it goes right back up. That's a V bottom. Okay. That's what happened during March. And I'll just go back to 2020. You can see what I'm talking about. See the V bottom? See the V? That's a V bottom. Okay. That was a very unique time and a very unique scenario. That's not going to happen this time. You're not going to get like, this massive drop and then this massive explosion where the market's going to run away from you. I really don't think that you're getting a V bottom. It's going to be, more of like a U-shaped bottom or like an L-shaped bottom. Now, what's a U-shaped bottom? A U-shaped bottom is a little bit more of a slower decline. Okay. And then the markets kind of start to base themselves out. And the markets will start to like kind of do something like this, like over time. And then they will start to then climb themselves back up slowly. And that'll be the U bottom. Okay. Then you have something called an L bottom. L bottoms are the worst ones because L bottoms are very sharp declines. And then the market's just basically.
You're a bottom, aren't you, Mike?
Nah, bro.
I couldn't resist. You know what? Just one.
Nah.
Back to what he's saying. Go ahead.
Yeah. So then you have an L bottom, which is you get a very violent crash, and then you get this sideways action. Okay. Those are the worst kinds. Now, an example of like an L bottom would be the airline stocks. Okay. The airline stocks. You can see, okay, if you guys go back here where you get a very, very sharp decline and then how the stock goes sideways for an extended period of time after the COVID crash. Okay, that's going to be an example of like an L bottom. I think this will be more of an elongated U bottom where we're gonna decline. We're not declining at a very rapid rate. It's not like we're in a complete free fall. There are some significant bounces in the middle of this. It's not like we're just in a complete free fall. Okay, so I still do believe that the net move is to the downside. You'll get more bounces in between here. You'll get like a positive news headline from Russia, Ukraine that'll make the markets bounce for 2 or 3 days. but then the Fed will come out with something. You'll get an inflation number in April, and people are going to think, the first rate hike didn't do anything, which obviously it's not going to. It takes months for rate hikes to get into the economy, not 1 month. Then the markets go back down, and then you're going to bounce again. And I think you're going to get an elongated U. Now, that's actually a better thing for investors. You don't necessarily want V bottoms, because V bottoms put a lot of strain and pressure on you to perfectly time that bottom. And V bottoms are more difficult to buy into because the market's declining so rapidly. It's scary. Trust me, I get it. Nobody likes to buy when stocks are going straight down in free fall. I get it. That's what you saw in March of 2020. It's scary, right? If we just go back, I'll just zoom this in. This was scary. I'm not going to lie to you guys. This was just an absolute rapid decline that took, weeks for us to go down 35%. Weeks it took to go down 35%. You look where we are now, we're down 14, 15%, and it took us 2.5 months to get there. So this is not a very fast decline. There's bounces that are in there.
Yeah. So ultimately, this would seem like it would be, because at that time when we had the V bottom over COVID, you had to be, look, even a guy like me didn't get in on it, and I'm somewhat educated. I'm not completely uninitiated from the market, but at that time you had to be educated, on the ball, and know exactly what you're doing and where you're doing it to take advantage of quickly. Here, there's a little bit more leeway for people, yes, is what I'm understanding. Yes. Is that there's a little bit of time between now and then, yes, whatever that looks like. There's a little bit of time between now and then to get yourself educated, get yourself into the right position, put your money aside, and be ready to take advantage of it. Because when this stuff happens, correct me if I'm wrong, this is how wealth is built.
Absolutely.
Maybe you can elaborate a little bit about what I mean by this is how wealth is built.
Great point, Adam. Really, really, really good point. That's you said what I was trying to say better. Because when you have those V-shaped bottoms, yes, the markets go up a lot faster, and that's a good thing. Everybody likes, the markets went up so fast. That's great. But when you're talking about building long-term wealth, most people did not buy anywhere near as much as they wanted to, during a V bottom. V bottoms are very difficult because you have a very small window of opportunity to be decisive. And it's tough to be decisive when the market is doing that. It's tough to be decisive when the market's doing that, which is exactly what happened during the COVID crash. Okay. It's tough to be decisive. And then when the markets bottom, they go back up like this. The window of opportunity that you have is very small. If you go back, and I'll just go back to, we'll go back to this, and you look at the window of opportunity that you had. Look at this window. This window was just a couple weeks for you to be really decisive before you blinked.
Yeah, I remember you told me, and I was like, I'm going to wait, specifically looking at Tesla at that time. And I said, I'm going to wait. And I felt that. I felt like I blinked and it was done. The opportunity was over. You're like, nah, man, it's you got to wait for the next time this happens.
Right, man. You blinked and we were already 50% of the way back up to where we were. We were already 50% of the way back within weeks. Right. So it's it's better because the market goes up and everybody feels good when the market goes up. But when you're trying to build wealth in your long-term portfolio, that's not good for you. You don't want the market to go back up that quickly. If you're trying to build a long-term portfolio, you'd rather the market stay here for a much longer period of time. So you could every single month put some money aside, and every single month put that money to work and buy and buy and buy and buy and build that long-term portfolio. And then the markets can go higher. So it's for the average person, and I'm talking the average run-of-the-mill person that just has a long-term portfolio. They don't really look at it that often, but they want to build wealth. It's better for you. The environment that you're going to get after this sell-off is better than the environment that you got last sell-off, strictly as it relates to time, because I do not believe you're getting a V bottom. Okay. So I think you're going to get a U-shaped bottom Okay, you're going to get a U-shaped bottom, which is going to give you an elongated bottom where you're not going to get like a dead low. Like a V bottom has a very defined dead, this one day is the bottom, and then that was it. The market's never looked back. I don't think you're going to get that. What the market this year is going to go through a bottoming process, which is where we're going to put in a bottom, then we're going to bounce, then we're going to pull back and test that bottom. We're going to break below it slightly, then we're going to get back above it, then we're going to bounce higher, then we're going to pull back again, then we're going to go sideways, we're going to bounce, we're going to pull back. You're going to get an opportunity this year when the dust settles to take your time. And the money you have set aside, you'll be able to put it into the companies that you really like for the next 3, 5, 7 years. And then you'll have a much longer period of time. Like, hey, like every month you can set aside, even if it's a couple $100 every month, just set it aside, set it aside, set it aside. And that's better right now because of everything that's going on with inflation. And this is why we work very hard at True Trading Group to make sure that the price of our platform is within reach for everybody, especially during this time when everything is so damn expensive, so that you could have, because it's going to take you a little bit longer now. Everybody doesn't have as much free cash sitting on the sidelines as they would because everything costs more. So maybe you might have been able to save $500 a month. Well, maybe now you can only save $250, right? And like the longer period of time, that U-shaped bottom is going to be better for the average person. You just have to not be afraid to step in and become a buyer when you see that the markets are down 25, 30%. That's when you want to become a buyer. You don't want to become a buyer when the markets are sitting up at all-time highs and everything is happy-go-lucky and it's rainbows and sunshines. That's not where the money is made. The money is made when everybody thinks the world is completely ending and nobody wants to buy and they're throwing the baby out with the bathwater. That's when you want to scoop that baby up and take care of it because that baby's going to grow into become the next all-star quarterback, Tom Brady. Welcome back to the Bucs.
You see the thing about Brady? Somebody bought, I think it was for like $400,000.
Yeah. Oh, I can't imagine being that guy.
God.
I can't imagine being that guy. Yeah, so the story that Adam's talking about, guys, the story Adam's talking about is somebody bought Tom Brady's final touchdown pass football for like $500,000. The very next day, he announces he's coming out of retirement, which means that's no longer going to be his final touchdown pass, which means the value of that football is going to absolutely plummet. Could you imagine? He spent $500,000 on this. Well, I don't know if it's a he, she, a foundation, whoever bought it. I don't know who bought it. They paid $500,000 for it. That's nuts.
Yeah. So, I got, you had just said that people are going to have the opportunity to take their time and everything else. And this is, what we do inside a True Trading Group. So one of the things that I want to touch on is recently we did a survey inside a True Trading Group and we have well over 1,000 responses right now. Survey's not done yet. We're going to let it run longer, but some of these numbers are starting to really take shape, right? For example, okay, you had said that people come in here and take their time to learn. That opportunity of taking your time to learn or having that time to learn, you would say that that's pretty important, right?
It's everything.
Okay, so just to kind of further that, right? If you had to guess how many people from 6 to 8 months and up that are True Trading Group members have made back their membership, what would you say that is? You don't know this yet because you know what it was last year, but you don't know what it is this year.
I'm not sure. I actually don't know.
Okay. It is 74.89%.
74.89% have made their membership fee back in at least the first 6 to 8 months.
6 to 8 months and up.
Okay.
And
That's
then the balance,
fantastic.
and then the balance have not, right? Do you want to see what happens when you go lower?
Yeah.
Hey, I'll tell you right now. Now we're going to do 0 days up to 6 months.
Okay. So basically over 6 months and under 6 months.
Now we're doing 6 months and under. 48.72% have made it back. And 51.28% have not yet.
Yeah.
That is what we are talking about here. This is a prime example of why we do not do a month-to-month membership with your trading group.
Yeah.
You know, it takes time. This is why we suggest, I mean, Mike, you can talk about it. This is why we suggest you come in and you get educated first and you don't just follow trades that you want to really, you know?
Yeah, guys, I can't, you know, I shoot you straight every single time I come on these live streams. We're as transparent as we can possibly be. You're never going to see me blow smoke up your ass. Trading is not a get rich quick scheme. You're not going to join True Trading Group and quit your job next week. You're not going to become a millionaire in a month. You know, becoming a successful trader, you have to really understand you're not getting a secret. You're not finding someone who has a crystal ball that could predict the future. You're learning a new skill. You're learning a new skill, and you really need to understand that just like any other skill, it takes more than 30 days to become good at it. Okay. You need training, you need education. You know, if you were to switch your careers tomorrow, let's say you're a police officer, but you're like, you know what? I don't like the way that I'm treated. The job's too dangerous. I'm going to quit and I'm going to go become a construction worker. Do you think that you're just going to quit your job and then 1 week later, you're just going to go and be able to just run and fully operate all of the heavy machinery that's at a construction site? Do you think you're going to know how to operate a bulldozer or a crane? Of course not. You need to actually be trained on how to operate the machinery successfully. Now, do you think that you're going to sit down in that machine and on day one, you're going to master the art of the bulldozer? Of course not. It's going to take you time. And I'm just using this as an example, but the point is that that's why we don't have a 1 month membership to True Trading Group, because it's not enough time for you to go through the courses, for you to, you know, do the quizzes, attend study groups, watch our webinars and workshops, go through the tools and resources that are on the platform. It's not enough time for you to actually say, oh yeah, this is going to work for me, or I'm going to do this. And too many people think trading is a get rich quick scheme and they quit before ever giving themselves a chance to see if you're good at this. Many of you, there's so many people that could become millionaire traders. There are so many people out there that could have become millionaire traders, and they're never going to know because they tried it out for 30 or 60 days with a Robinhood account with no experience, no education. They put $2,000 into an account. They lost it by holding some option for past expiration because they didn't even know what that meant. They blew up their entire account, and they're like, oh, this trading thing's a scam. Well, no, it's not. You just don't know what you're doing. And there's so many people that quit before ever giving themselves a chance to succeed in the first place. That's why TTG is a year membership. And that's why we say, if you commit to the platform for an entire year, as long as you go through the courses, pass the quizzes, and attend one study group, and you still do not make that membership fee back, we'll give you double your money back. I'm not kidding you. We will give you 2 times what you pay for our membership if you don't make that membership fee back after the year. And there's a reason why we offer that to you for after the year, not after the first 30 days.
Yeah, absolutely. So, anyways, let's talk about this last part real quick, guys. Also, can you do me a favor? Can you let us know, you know, if you got value out of this live stream, if you like kind of what we did tonight, which is just more of an organic conversation. Can you guys, instead of typing the number 1 in chat, can you smash that like button? Let me know. 625 people gone ahead and liked it. Maybe you can sound off in the comments. Give us a little bit of feedback. If you liked what we did tonight a little bit differently, we've been going for about an hour and 10 minutes, strictly talking about all of this stuff. I know that there's value in all the live streams that we do, but there's, you know, I feel like tonight this was really a good conversation to have. You know, I feel like this was a good conversation to have.
Yeah, for sure. For sure. I think this is a really good conversation. It just kind of, just flowed. It's something that, I don't know, man. I just feel like not enough people out there talk about the stuff that really matters. There's so much sensationalism. There's so much, everybody puts on a show, and not a lot of people shoot you straight and give you transparency and give you information that's actually meaningful, that's actionable and meaningful information that you could absorb, understand, and actually take action that can actually help you guys make money or help you prevent you from losing money, whatever it is. The net positive benefit that I want to make sure that we provide to you guys on this live stream. It's a daily thing here on the TC Live. So if you guys haven't smashed the like button by now, make sure you do so, and subscribe to the channel as well.
Yep. So getting back to the little poll that we put up at the beginning of the stream, we are at 954 votes right now. So first of all, I just want to say I appreciate there are more votes than people on this stream at the moment, right? Mm-hmm. So I want to just say that I appreciate everyone taking the time to answer that. With that said, little scary, 15% of people said, yeah. So the question for those that are new is, do you believe the U.S. stock market is going away? And what I mean by going away, I mean blowing up, being obliterated, no longer in existence. It is literally going to go away.
They turned the NYSE into a Marriott.
Right. Right. And then like each room has its own little themed room. So you can have like the bowl room and the short room, anyways. So 15% of you out of 964 now said, yes, you do believe it's going away. 85% of you are sane and well-rounded human beings. So I'm joking, but what I meant, what I want to get into on this is, Mike had said something a little bit earlier that I really want to make clear, and I hope that people hear us out on this. Everything that is happening in the stock market right now is 100% normal.
Yes.
Okay? This is what happens no matter what environment you are fortunate enough to learn how to trade in. There is always going to be opportunity as long as the stock market is open. So we see a lot of people, they'll say, I'm afraid to get into the market now. This is not the right time to get into the market. There's no opportunity right now. This market sucks, so on and so forth, whatever. Not true. Okay? Not true. As long as if you believe the stock market is not going away and going into oblivion tomorrow, there is opportunity to make money in the stock market. Is it going to be you buy, you hold, and things go up? Stocks only go up, this only goes up? No, it isn't. But it's not supposed to be like that. If you got into the market in the past 2 years, you weren't with True Trading Group or some other place that was legitimately teaching you something, you learned absolutely nothing. You were given, it's like a kid that goes to summer camp and then comes back and then expects it to like be summer camp activities every single day forever, right? It's like not every day is summer camp, kid. Like,
I want to point out something about, let's talk about normal for a second. Okay, let's talk about normal. 2010. Okay, and this is a weekly chart. 2010, you will see a stock market decline of about 16% right there on the S&P. We're not even there right now. There's a 16% decline right there. Then let's go to 2011. There's a 20% decline. That's a 20% decline in 2011. Okay. Then you can fast forward to 2012. Let's look at this decline. So here's a decline in 2012. Let's see, from 142 down to 127. That is an 11% decline. Okay, and then let's go on to 2013. Okay, 2013 was a good year. So here's your decline in 2013, and that's going to be from like 170 down to 156 divided by the 170. That's about an 8% decline. Okay, then you go on to 2014. Let's go to 2014. Here's your biggest decline in 2014. You're talking about that's 202 down to 182. That is a 10% decline. Okay, now you keep going on to 2015. Well, now here's 2015. 2015, you went from 214 all the way down to 182. So 214 minus 182, that is a 15% decline. Okay, like the point that I'm making is you're seeing these are all declines that are similar to the percentage decline that you've experienced so far today, this year. Then you have 2018. Let's look at 2018 because this was fun. 2018 from 294 all the way down to 234. 294 to 234. That is another 20% decline. Right? Like you're seeing, and then this was the COVID crash. Okay. It's not like this is the part that's not normal. Do you realize that? Do you realize that out of everything that I just showed you, this is the part that's not normal? Because guess what, folks? That's normal. Okay. That's normal. That's normal. All of these declines, that's normal. That's normal. All of these declines, these are anywhere between 10 and 20% declines. Okay. These are all between 10 and 20% declines. So you had 2 years since in the last 12 that you did not have that. One was 2017 and the other was 2021. So you tell me what's normal? What's normal? Is the 10 to 20% decline normal? Or is 2017 and 2021 normal? The point that I'm getting at is that markets go down. And it does not mean it's the end of the world when markets do go down. It's normal. And what I'm seeing in the overall markets, I think there's still some more downside, but the world is not ending. I think the S&P bottoms out. I think it's got to be somewhere in that, 25%, maybe 30-ish, but it really just depends on what happens on the global scale with all these different macro factors, right? Obviously, yes, if the Russia-Ukraine war does not end and Russia fully takes over Ukraine and they decide we're going after Lithuania and all these other countries and they step foot into NATO territory and World War III starts, then yes, that's going to change, price targets, right? If China invades Taiwan and the U.S. gets involved there and it's China, Taiwan, it's Russia, Poland, and the U.S. gets involved in NATO, yes, and World War III happens, yes, that's going to change things, but still the world's not going to end. Okay, actually, historically, if you go back in time, war has actually been a net positive in the future for stocks.
Sure has.
War has.
Sure has.
Yeah, it sure has. In history, war has been a net positive for stocks. Now,
don't misconstrue what we're saying. We're not looking. We're not hoping.
Right. Yeah.
We're not hoping for a war. We're not
at all.
We're not looking to capitalize off of war. But what we're saying is that it doesn't matter what we want or don't want. Of course, if you gave the option in front of us, which would you rather have? No war or war. We would 100% choose no war, no matter how much money we could make. Okay.
Right, exactly.
And that's just the fact. However, sadly, Mike and I do not control those things.
Right.
Doesn't matter what we say on the live stream, it's not going to control those things. So what we're going to do as part of our job is to identify the opportunities as they come about with the situations that are put in front of us. So if war happens, this is how we will make money. If war does not happen, this is how we will make money. If the SPY goes to 400, this is how we will make money. That is our job. So no, we are not, we're not advocating for that, but it is what it is. If us going on a live stream and protesting a war would make it so that war never happened, then we would do it. But sadly, it doesn't. Okay. And traditionally, war is good for the stock market. So there's a way to play that. Okay. That's it. That's all that there is to it. Just because there are real world events that are taking place doesn't mean you have to sit home, be broke, and afraid. It's that simple. You want to sit home broke, afraid, and sad? Fine. We'll deal with what the market, the universe, and the world gives us, and we'll use that to continue to move forward. And that's what we do at True Trading Group.
Exactly.
All right. So I think with that, we're good to go. I think let's just answer this question. Mike, how you want to make money tomorrow, man? Let's touch on that real quick.
Yeah, let's go through things here. Tomorrow, what I'm looking for here, and I'm going to think about this a little bit more overnight. I'm going to, I'm going to follow the futures market and everything, because tomorrow's Tuesday. It's day one of the Fed meeting. You get your Fed announcement. You get your Fed announcement on Wednesday. Okay. So typically the day before Fed announcement is typically a slower day. It's typically a less volatile day, because a lot of people aren't really going to take a strong stance until they hear from the Fed. Now, obviously, there's other factors that could move the markets, like Russia, Ukraine. The one thing that you've got to pay attention to tomorrow that maybe could cause the markets to bounce off of 415. 415 is the last support level that I have until you have the Russia invasion low. And I'll go to a 15-minute chart just to show it to you guys. And it's right here. Okay. This low right here, which is where we got down to when we tested. All right. This area which is also today's low. That's the last level of support that you have until you get to the Russia invasion low. And I don't believe if you get down to that, I don't believe that Russia invasion low is the low. I don't believe that that's the low. I believe that low gets broken. But let me tell you, specifically talking about tomorrow, what my game plan is. Guys, today's code word, real quick, before I do tell you how I plan on making money tomorrow. The code word for today is capitulation. Capitulation. All right. Now, if you're not a member, don't worry about this. This is for members only. Okay. We do a lot of fun giveaways. We give away cash, electronics when it comes to the teaching members. And the code word for that giveaway is capitulation. Okay. So my teaching members capitulation code word. All right. So now this is that level. What I think could happen is tomorrow we could break this level, but hold the the Russia invasion low. The Fed raises rates on Wednesday. It's actually a net positive for the markets. And I think the markets could actually bounce from the Fed raising rates on Wednesday. I'll talk to you about this on tomorrow's live stream, but there's very specific verbiage that I'm looking for from the Fed. It's not about the rate hikes. I expect 25 basis points, but I want to hear about the balance sheet runoff and quantitative tightening. If the Fed says we're not going to do that yet, the Russia-Ukraine situation has caused us to put that on the back burner for a little while. I think the markets could actually bounce from getting the 25% rate hike. But if the Fed comes out and says, yep, 25 basis points, we're on autopilot, we're going to raise every 25, we're raising every meeting, and we're going to start balance sheet runoff in May or June, then I think that's going to be a net negative, and the markets would actually sell off. We'll talk about that tomorrow, though, on tomorrow's live stream. Okay, so I'm actually looking for us to continue lower tomorrow. If we break below 415, I think you move down towards 410, and then you can maybe get a bounce when the Fed actually raises 25 basis points. But then again, I don't believe that bounce holds. I think the markets then move lower again after that, but you can get a couple of days of upside. The other thing to pay attention to tomorrow is that the Russia-Ukraine talks are going to be picked up again tomorrow. They were paused today, not because the talks went bad, but because the two sides needed to come to technical definitions of terms that were in the negotiations. So they said, okay, well, you have to come up with a definition of this term that they were going back and forth with during the negotiation. So talks will pick back up again tomorrow. So maybe you get a positive headline there that can probably make algos come in and buy the
Mike,
market.
what's your thoughts on PPI data for tomorrow?
Every inflation number you're going to get is going to be hot for the next, probably until you run until like April or May. I expect all inflation data, I expect it to be either within expectation or higher. I don't expect any of the numbers to come in under expectation. And I mean significantly under expectations. So I expect all PPI, CPI numbers to come in either at or above expectations.
All right. Very good. All right, guys. So yeah, great stream. I'm gonna go fade off into oblivion. Mike is going to tell you guys all about the membership and how you can sign up. Strongly suggest that you do. And you'll see why in a minute. All right, Mike, you're up.
Yep. All right, guys. So there you have that. So that's kind of my thought process on the overall markets. And again, we'll talk more about the Fed and everything tomorrow on tomorrow's live stream before we go into Wednesday's trading session. And Wednesday's trading session is going to be all about the Fed. It's not going to really be much about Russia, Ukraine. Everyone's going to be focused and fixated on the Fed. If I missed any of your questions today here, guys, on this live stream, and you're not a member of True Trading Group, don't worry about it. We do this 6 nights a week. Okay. Just make sure that you click the subscribe button and turn on your notifications to make sure you never miss out on any one of these live streams. If I didn't get to it today, maybe I'll get to your question on the next live stream. But speaking of those that are not members, I'd like to see how many people are with us right now that are not members of True Trading Group. If you guys are not a member, do me a favor and type the number 1. Type the number 1 if you are not a member of True Trading Group. We got Lord Vader, Mercury Machine, HTG, Aaron, Paul Manning, Big Will, Al A, Dan Kosamapa, Crystal Assassin. Great, guys. Beautiful. A lot of people that are typing the number 1 here. A lot of people that are typing the number 1 here in chat. I love it. I love it. I love it. I love it. Welcome all of you that are new. Okay, guys, listen, for those of you that are new, let me tell you, I'll share with you some information about how you can join the TC platform, and I'll show you guys the platform as well. But I want you to think of True Trading Group as the Netflix of trading communities, because you pay one price for the whole year. You get access to all current and future courses, all current and future tools and resources as well. Normally the membership is $2,212. However, the next 17 people that go to ttgoffer.com and use the code TTG121 will get a 45% discount, brings the price down to $1,209. And as a special way of saying thank you, the next 17 people to do that before midnight will get a brand new free Amazon Kindle Fire HD tablet, totally free, for joining the TT family. We even cover the shipping costs. We ship anywhere in the world. You'll get that Amazon Kindle Fire HD tablet, folks. It's the perfect tool for you to trade on the go. Don't try to trade on a small screen like your cell phone. You try to type in 100 shares. You accidentally type in, 1,000 shares instead of 100. That Amazon Kindle Fire is a great tool for you guys to trade while you are on the go. And you're also going to get 2 small free private study groups as well. At True Trading Group, guys, we combine a professional trading education curriculum that's both in-depth and complex, yet very easy to understand and implement quickly Whether you never traded a day in your life or you're a pro looking to kind of gain an edge and take your trading to the next level, the TG curriculum and education and platform can help you reach your financial goals that you never thought were possible. We pair that with premium investing tools from today's top financial tech companies that if you purchased on your own, they'd be worth over $4,000 a year. You get some the tools from top companies like Benzinga, TradingView, Quote Media, CVOE, Polygon, Trade Ideas, and more. To top all that off, we're a community of active, like-minded, and educated, helpful traders and investors that are led by our team of full-time pro trading moderators with over 100 years of trading experience that currently sport about a collective win rate of about 80% that focuses on stocks, options, crypto, futures, day trading, swing trading, and also, of course, long-term investing. And we actually give a shit whether you guys succeed or fail. Your results matter at True Trading Group. I can't make this any more clear. Your results, not anybody else's, not mine, not the other moderators, your results, and it's measurable through your P&L. Okay? We exist to empower the retail trader. And the bottom line is that the vast majority of TGD members are making money and becoming better traders. If you don't believe me, watch this. My TGD fam, I'm talking to you directly now. If you are a member, I want to know very simple. Are you making money because of True Trading Group? If that answer is yes, I want you to type the $ in chat right now. Now, anyone that's not a member, my advice is to just count how many people type the $ in chat right here, right now. There's no difference between these people and you. These are TGD members that found us most likely through a live stream, just like this, just like you. They've got full-time jobs. They've, had no experience before they joined, but yet here they are telling you that they're making money because of the education that they're receiving in the platform. You just heard me for about the last, 5 or 10 minutes talk about how great TTG is and why you should spend your hard-earned money and invest in yourself with the TG platform. But now you can watch as I put my money where my mouth is. Because anyone that joins True Trading Group, and not only are you going to get the 45% discount, brings the price from $22.12 down to $12.09. Not only are you going to get a free Amazon Kindle Fire HD tablet, not only are you going to get 2 small private study groups to get individual attention to get the help that you need. Not only are you going to get access to all of our current and future courses and tools, but I'm going to give you double your money back at the end of your membership if you do not make the $12.09 back at least once throughout your membership. As long as you complete all of our courses and pass our quizzes and attend one private study group. And listen, folks, you get the answer key to the quizzes. So that's not like the catch. Don't cheat because you're only cheating yourself. You need to know what information you understand and don't understand, but you do get the answer key to the quizzes. But as long as you go through the courses, pass the quizzes, and attend one study group, if you do not make that $12.09 back, I'll give you $2,418 back. I'm dead serious. So just to clarify, I'm offering the next 17 people that sign up for $12.09 right now before midnight a double your money back guarantee. Why do we do the double your money back guarantee? Folks, we simply believe that if I'm going to come up here every single night and I'm going to ask you to believe in True Trading Group's platform, the platform that we've created for the retail trader, and invest in yourself, that we need to also double down on that. And we're going to put our money up with you. So I'll ask you to put up the $12.09, but if you don't make the $12.09 back after doing those things, I'll put up $12.09 as well. And we're going to give you $2,418 back. Just go to ttgoffer.com right now. The price is going to still show $22.12. You have to enter the coupon code TTG121. And then press enter, and then the price will drop to $12.09. Enter your information, then just check out. You're good to go. You'll see on tgdoffer.com everything that I said to you. There's no fine print. Okay, everything I said to you is included. It's all right there. The money back guarantee, the free Amazon Kindle, it's all right there. Okay, guys, tonight the price goes up at midnight. Okay, so don't forget, every single day the price is going to start to climb. So at midnight tonight, that price is going to jump. So again, you can go to ttgoffer.com and use the code TTG121 to get that discount and get the money back guarantee. Let me actually show you the platform. Let me show you the tools and resources that are included that you get access to, because like I said, you pay one price, you get access to it all. You've got our chat room, of course, where myself and 8 other professional traders share their screen. They're live on the microphone, calling out trades, providing you with market commentary and analysis. We sport about an 80% collective win rate. We're fully transparent. You can go look at our trading journal on our site. It tracks every buy and sell that the mods make, so you can see how you'd be doing if you were following along with our trades. You also get 2 small private study groups with the pro trader from TTG to get the help that you guys need. Make sure that you can get some individual attention. You get Benzinga Pro's real-time news feed, give you live breaking up to the second news alerts directly inside of chat. All right. No more relying on delayed news like a Yahoo Finance. You're going to get news as soon as it crosses the wire. Everybody welcome Justin. Justin is the newest member of the TTG family. Welcome, Justin. There's now just 16 of those tablets left. All right. The next 16 people will get a brand new Amazon Kindle Fire HD tablet. We even cover the shipping costs. We ship anywhere in the world, folks. All right. You also get TradingView's premium charting software. It's one of the most commonly used charts by active traders. You got the Trade Ideas scanner as well. This will always make sure you're focused on the hottest stocks, which will make sure that you know what stocks are making new highs, new lows, which ones have a surge in volume. And then, of course, our simulator. The simulator will let you trade stocks and options with fake money, but also with real-time data. So you can practice implementing what you're learning in the courses first. Make sure you can make money with the simulator before you risk your hard-earned cash. We have our own proprietary scanner that also is similar to FinViz Elite, but it lets you scan for crypto, for my crypto traders out there. You also get dark pool data and unusual options activity, stuff that only professionals usually have access to. Now it's at the fingertips of my TTG fam. You've got a full trading performance journal as well. The trading performance journal will track all of your trades, give you statistics and data, so you can see what you're doing wrong. So we know what you need to make adjustments on, so we can better your results. You have a social sentiment scanner that will scour through StockTwits, Reddit, and Twitter and tell you what stocks are being mentioned the most, so you can stay ahead of the crowd. Unlimited analyst ratings and insider buying and selling information on any stock you're interested in through our stock profile tool. Okay. You're going to get our daily watch list. Every day you'll see what stocks the moderators have their eyes on, and more importantly, the game plan on how we plan on trading those stocks. And then, of course, all the courses. Guys, the courses are a simplified yet expanded upon version of what I learned working at the fund in New York. There's beginner and foundation courses, advanced courses, options, swing trading, trader psychology, crypto, you name it, we've got it all. There are no VIP or pro courses that cost more money. Once you guys pay the $12.09, you get access to literally all of it. Then we have a video library, over 200 hours of additional educational video content. These are workshops and webinars we've conducted live, like how to grow a small account, how to trade while working a full-time job, how to trade during a market crash, just to name a few. And you can attend all these workshops live when you are actually a full-time member. And then anything we add to the platform down the road, it's included. We don't ask you for more money when we add a new tool or resource. If you have questions about the membership, you can send a text message to 201-775-9702. Again, that's 201-775-9702. If you have questions, don't call that number, text it. 201-775-9702. Folks, also directly now I'm talking to my TTG members. Tomorrow at 4:15 p.m. is going to be one of our last lifetime workshops that we are phasing out the lifetime membership. We are almost done. We have almost filled all of the lifetime spots. Tomorrow will most likely be one of our final and last lifetime workshops. It'll be at 4:15 p.m. Eastern tomorrow. So again, if you are a member of True Trading Group and you're interested in a lifetime membership, before we phase it out, tomorrow at 4:15 Eastern will be one of our last workshops for the lifetime membership. Okay. Now, those of you that are still not members, you got to really ask yourselves, is it not time for you to invest in something real? Something that has the ability to actually help you reach your goals. Look, I can't promise you the world. I can't promise that you're going to make millions. You're going to fire your boss, get the girl or guy of your dream, buy a private jet, drive your Lambo, park it at your mansion, and call it a day on your yacht. I can't promise you that. But I can promise you a real chance at success as long as you're willing to put in some effort. I can promise you that we're going to give you double your money back if you fail to make the membership fee over a year. I can promise you that we actually do care about your success. And we can promise you that the day that you sign up for True Trading Group is the day that our relationship begins. The ball is in your court now. You just have to go to ttgoffer.com and enter the code TTG121. If you're still unsure, we do have a 1-week trial. You can go to ttgthree.com. Again, that's ttgthree.com. If you guys want to sign up for that 1-week trial, okay, it's a one-time payment of $3. There's no automatic renewal, no automatic upgrade, no recurring payment. It's literally just a one-time fee of $3. All right, that's it, folks. Otherwise, go to ttgoffer.com and enter the code TTG121. Thanks so much for joining me here tonight, folks. Make sure you subscribe to the channel, smash that like button, turn on your notifications. I'll see you guys all in chat tomorrow morning. Later, guys.